Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for March 5th, 2024. Well, yesterday we had quite an interesting day with a lot of chop, kind of as expected. I said it was likely going to be a hurry up and wait day. It really did turn out like that with some mixed results. This morning, we might have very much a similar day. We'll take a look at that in just a second. With not a lot of data to go on and really waiting on some key economic information as we move in through the rest of the week. Let's take a look at what happened overnight. Asian markets mostly lower overnight after Beijing really came out with a way they're going to try and reform and recover their economy and setting a 5% GDP growth target out there, but it just didn't seem to impress all that much. As a matter of fact, Hong Kong on that news fell 433 points or 2.61%. Shanghai was the only index that increased overnight in the Asian markets, up 8.49%, 8.49 points or 0.28% as a result of that news. So it kind of fell on ears that it's going to require an awful lot of money from the government and stimulation to get there, and it just wasn't all that impressive. If we take a look at European markets are pretty much flat across the board. We have a little bit positive, a little bit negative in Europe right now. It seems that they are just struggling with this idea that the ECB meeting coming out on Thursday, their decision on Thursday, could leave rates flat. And that's where they're kind of expected to be, and markets kind of struggling with that in Europe at the moment. And then if we look at U.S. futures are down across the board, with NASDAQ taking maybe the biggest hit, probably as a result of what happened in Hong Kong overnight. Just a little bit bearish in the diamonds and S&P futures this morning, with just that kind of an interesting fluctuation here in prices. As a matter of fact, Bloomberg has an article out this morning that I just think is kind of hilarious. It says stocks slip as Fed rate uncertainty weighs. Now, if you've been listening to the talk of any of the Fed members, I don't think there's any uncertainty. They're not likely going to cut rates because of the data that we've seen. Yes, we're seeing a slowing economy, but their inflationary numbers are not improving just yet. So unless it's some kind of a surprise move by the Fed, who thinks that the Fed is going to cut? It's remarkable to me, but the market itself seems to have this overwhelming confidence that they know what the Fed is going to do, despite what the Fed has been saying. So be careful out there, everyone. If we take a look at oil prices this morning, oil prices are pulling back a little bit. We know OPEC supply or cuts to supplies had us bouncing around there just a little bit, but we're seeing demand problems all over the place in the world, just factory orders coming down, all kinds of things. And so we've got oil just a little bit lower with some demand concerns, only down 25 cents at 78.49 a barrel. Brent is down only 14 cents, and natural gas is just ever so slightly lower here this morning. If we take a look at our bond yields today, well, our bonds are moving backwards today, pulling back. They were ticking higher yesterday. They're pulling back a little bit today, and it's that same dancing around here that we're doing, where the market's struggling. Are we going to cut? Are we not going to cut? We had gold and silver prices surging yesterday with the idea that the Fed was going to cut rates, but then we're not getting any kind of indication from the Fed that is the case just yet. And if we look at our bonds, they're fluctuating with that kind of uncertainty as well. The 2-year bond coming in at 4.58%, the 10-year coming in at 4.18%, which is a pretty substantial decline here this morning, and the 30-year bond at 4.32%. Our short-term bonds are still well over 5%, 5.25% as a matter of fact. So we have this remarkable inversion that continues to go on, but the market has just loved to ignore some of this data in the hope that they know what the Fed is going to do. And boy, there could be some big point moves as a result of that uber confidence that the market has. If we just take all of that into consideration, and then we take a look at Target this morning. Target has already reported here this morning, reporting kind of lackluster performance on holiday sales, but it's getting some initial bullishness here in this pop. So a little bit of retail pop here today, and there's going to be kind of a theme of retail in the earnings this week. So let's keep a close eye on these as they continue to progress. So what does all that mean for today? Well, how about we settle in? Let's buckle up. Let's get ready for the Tuesday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Let's take a look at these charts and see if we can try to shake off some bias and figure out how we might want to approach the market for today. Well, when I look at the diamonds in here, depending on how you draw that trend, we're right out there on that edge of the trend, holding price support in here. So there's every reason to believe that if we can find some kind of bullish inspiration in the market, that we could start pushing this right on higher here. So I would look in here if those bulls can find that inspiration. A push up through this area right in here would be pretty substantial. And then breaking on through there, we're going to see, well, just getting up in there, we're going to get a new high close if we close above that area. If we can push on higher, a new high print in the market. And there's every reason to believe, the way the market's been acting, that that is possible. Now, if the bears were to find inspiration today, well, you can see where our challenge is going to be is if we were to pull back and test this area of price support. If that holds, we're in good shape. If that were to fail, well, you can see then we probably set ourselves up for a pretty substantial point pullback, because there is little teeny tiny areas of price support in here, but nothing major there in the middle. But maybe even all the way down into here if we get some negative reaction in the market. So once again, we want to be prepared for both sides of this market. And I think if we do start to sell, the point moves could be substantial. So make sure you're protecting yourself. You have a plan to deal for that potential pullback. If we take a look at our SPY, well, SPY tried to push up, and we made a new high print yesterday in the SPY. Everything was looking great, but then it faded right back, and we're seeing this fade this morning as well. Maybe a little bit of a shooting star type pattern up here, but if the bulls can find inspiration in the market, we're going to be looking at first breaking the top of that candle right there for a new record high close, and then new record high print, getting past that wick. Certainly every reason to believe, if we can find some inspiration, that we can push right on through that level. Now, if the bears get engaged here, then support would be underneath that candle right there, and you can see that little bit of price support in there. Support would be right in this area, so watch that carefully. A breakdown from there could get a little bit, raise a little bit of concern in the market. There might be a little teeny tiny support right down in there, but I think the high probability is we would push down, maybe test those lows, and maybe even that trend here in the chart. And pushing down through there, this would be the bigger level of price support pushing down in there would be a very big and very painful point move for the market if those bears were to really get engaged there on the SPY. If we take a look at our QQQ, now QQQ started out with a pretty darn good day going and just faded. But nothing terrible in there on the QQQ. You can see we didn't even break down halfway through that candle. Came real close, but a little bit of concern maybe coming in on there. And then you see we've got this potential gap down here in the QQQ this morning. So if the bulls find inspiration, first thing we need to do is push back up through here and then attack the all-time high here in the QQQ to see if we can break that. Anything past that up here would be all-time high prints in the market, and certainly does seem like a possibility if we can get the data to support that. The market wants to go up. There's so many buyers in here in anticipation, but all of this uncertainty about rates, what seems kind of odd to me, because the Fed's been pretty clear, at least at the moment, in my opinion. The market just seems to think it knows something that the Fed doesn't know. Maybe they're right, I don't know. Now, if the bears find inspiration, well, pushing back down into here, testing the top side of that support, certainly looks likely. And if we do that, we might slip this little trend that we've got going here to the upside. It won't get a major concern in the market if we touch that and bounce right back off of it. Where the concern will come in is if we were to slip on down here to this next level of price support. And this is much more substantial price support in the chart, and we would be maybe giving up this little upside trend here in the market. Now past that, it gets really ugly, because past that we fall into a gap. If we were to come on down through there, then there is some price support here, or all the way into the gap fill here in the QQQ. So be prepared for those potential down moves if they begin, because I have to imagine there'll be a lot of folks running to close out trades just as quickly as they can to protect profits if we start to show weakness. And then if we take a look at our IWM, boy, IWM was giving us some pretty good signs yesterday that, hey, things were copacetic and everything was looking good. We broke through this resistance here in the chart, and we were pushing on up like we were going to attack this bigger resistance up here. And that's a pretty good resistance up there. It looked like we were going to attack it, and then ended up turning around, leaving a dark cloud cover here on the chart. We'll want to see if they can push on beyond that today and come up here and tag this level. So if those bulls can find that inspiration, well, first off, we need to see if we can break back through there. And if we can, then we can attack yesterday's candle highs to see if we can break on through, pushing on up to this major resistance level in the chart. However, if those bears were to find that inspiration today and push this on down, well, you can see we've got a little bit of price support right in through here, and that trend we might catch in there and be okay. If we can bounce off of that. If that doesn't hold, then I would suggest we're probably coming down into this bottom of this little grouping, and maybe even down to this bigger support level in the chart. So watch that carefully. Again, some big possible moves to the downside if those bears start to engage. If we take a look at our VIX, well, our VIX popped up just a little tiny bit yesterday, so we still see uber confidence in the market that there's no fear here at all. But we did get that little teeny tiny increase, and once again, I think we've got this wedging pattern in here, and anytime you have these wedging patterns in a chart, you run that about that 50-50 chance that it'll break one way or the other. But watch that carefully here. Right now the market isn't suggesting there's any fear, But with those big point moves to the pullback that I've been suggesting, we could certainly see that spike really quickly if those bears engage. If the bulls can continue this uber confidence in the market, every reason to believe the way this chart looks, that we could still continue to push right on down here into these 12 handle areas of the VIX. And then looking at our T2122, our T2122, well, we hooked over a little bit yesterday. Remember, this is a 4-week new high, new low ratio. So one of the things you have to think about is we just had more stocks selling yesterday than going up. No big surprise. We were up here in the bearish reversal zone, and we just didn't have any major data for the market to grab onto. It's why I said yesterday it's probably going to be a hurry up and wait kind of day. And even though we have just a little more data today, I think we could be another day of hurry up and wait here as we wait for Jerome Powell speaking in Congress on Wednesday. So watch this carefully. If the bulls can find inspiration here today, well, we've certainly, a little upside trend there, we've certainly opened that upside opportunity here where we can get something going if those bulls are willing to engage here. If the bears are willing to engage, well, got a big downside opportunity. So watch that carefully here as we sort out some of these details and some of this uncertainty that the market is feeling here in the right now with rates. If we take a look at our T2108, this is the percentage of stocks above the 40-day moving average, and it was going up yesterday, but by the end of the day closed just a little bit down. Overall flat. I don't see any problem with this. We were up here testing some areas of price resistance in the chart. Don't see really just an uncertainty here in the market. So we're kind of trapped between a resistance and a support level here on T2108. But we got more stocks declining than going up. That's what we're showing here. And then T2107, well, T2107 did come in just a little teeny tiny rise. Mostly, I would call that flat. You can see still trying to challenge that resistance area in the chart. We've got good support below as we're trying to figure out what comes next here in the market. And then T2101, this still continues to be one of my major concerns out here, is that we've elevated the market so high. We've just been going up and 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 up in the market. But our market breadth has been very, very weak following this downtrend. Now, the good news is the breadth turned up a tiny little bit yesterday, but it really wasn't enough to inspire here, and we still have this major divergence going on between prices and market breadth. And this is another one of those reasons, if the bears were to engage and we see this breadth suddenly come up on a bearish wave, that's why I think there's some big point moves that could be seen to the downside if there's a reason for those bears to attack. So just watch that close. Let's take a look at our economic calendar. First off, let's do that economic calendar here. That economic calendar here today, we've got a little bit more going on here. Today we're going to get a PMI composite number. PMI composite is suggesting a 51.4, and on services a 51.3. We'll want to watch these pretty closely. This isn't a real important number here today, but remember, anything over 50 shows growth in the sector, that we're getting some growth. So we're just up there in that growth area of those numbers. It would be nice to start seeing those come up, but I think there is a risk that we might actually see those numbers pull back. So watch that carefully today. Factory orders are looking for a negative number here today, a negative 3.0 from a 0.2. So we're seeing that factory order decline. And I think if there's something in the market that could miss today, it might be this. Based on some of the numbers we saw last week, we might see those factory orders come in with a bigger negative. So watch carefully for that. And then we have our ISM services number. And ISM services has been one of the areas of the market that's been pretty darn resilient. But you can see they're looking at this to decline just a little bit from a 53.4 to a 53. So watch that carefully as we continue to see services do well, but we're also seeing record credit card debt, and we're actually seeing default rates of those credit cards rising. So we'll see if people can continue to go out to restaurants and services and things like that with that circumstance occurring. We'll want to watch that pretty closely. After that, we've got some bond or bill announcements. But everyone's going to be thinking about Wednesday with Jerome Powell, and included in that, we're going to have the job openings report. We've got ADP numbers. We've got the mortgage application numbers, wholesale inventories, natural gas, petroleum status numbers. We've got some Fed speakers and a beige book in there, along with a 4-month bond auction. So watch that closely. Kind of a busy day, and everyone's going to be keying off of the statements of Jerome Powell tomorrow in Congress. Let's take a look at our earnings calendar here for today. And our earnings calendar, well, we've got a few things on there for notables today. I've already mentioned Target, kind of a lackluster report, but it is going higher here today. We're also going to get Nordstrom's in here. We're going to hear from Ross Stores. We've got CRWD reporting, CHPT. Box will be an interesting one to watch. So there are some inspirational type reports here that could maybe get us moving on the day. So watch those carefully. Make sure you grab a screenshot of this if you want that full list of notables. Let's take a look at some stocks that could be setting up for today. But before we do that, everyone, if you could do me this quick favor, if you could please click that subscribe button on YouTube and also click that bell icon when it pops up. That helps the channel an awful lot. And probably more importantly is that you click that thumbs up button and leave a brief comment. It's the engagement with the video that really helps trigger that algorithm to show these videos to more folks. Thank you so much to everyone who takes the time to do that. I do truly appreciate it. Let's take a quick peek at some of these stocks, and remember, everyone, these are not recommendations to buy or sell any security. You need to do your own due diligence, be very, very careful in this market, and make sure you're paying close attention to some of these data sources coming in, because we could whip pretty quickly, I think, to the downside. Now, if we take a look, if you guys remember, I had mentioned this some time ago about FXI. FXI is the China ETF, iShares ETF. And I suggested watch this carefully. And we were down in here looking at those higher lows, that this could rally. After a really nice rally here in FXI, you can see we might be giving up this trend here this morning in the chart, but coming into a little bit of price support. So I don't know that I would be overly worried about that, but if you're interested in something like this, I would watch that closely. And we're pulling back right where we would expect to, right along the downtrend where we have failed before. The question will be, can we hold in this area and then find that energy to push up through that chart? But keep an eye on that. And the other one would be EWH that I've mentioned multiple times. This one's already fallen apart. We rallied up to that downtrend here and then reversed back to the downside here. So this is kind of failing that trend, failing support. So just be really, really careful in here. We're trying to decide, are we going to buy the story of China in their recovery plans, or will it sputter and fail as their real estate crisis continues to expand? As a matter of fact, there's a court hearing coming up in Hong Kong. A wind-up order has been issued to Hong Kong to wind up Country Gardens. That means wind it up and start going through the process of liquidating. We'll see what the court has to say at sometime this mid-month. that it's supposed to hit the court, I think, in Hong Kong. Well, is it this month or next month? I can't remember. But it is coming up, and several of their developers have already received those wind-up orders as well. So major problems still brewing over there in that Asian sector. So watch these carefully. Now, as you know, yesterday I was talking about gold and silver, and oh my goodness, wow, gold really took off. We're talking gold. Take a look at this, breaking out to all-time highs. Remarkable here. GLD just ripping to the upside, looking very, very strong. Now, I would not, that's a weekly chart, but I would not want to chase this. You can see it's starting to stretch up here even further this morning. And this is largely in anticipation that the Fed's going to start cutting rates. Go figure. But watch that closely here. I would wait for the next rest or pullback in that chart. I wouldn't want to be in that. I'm loving my physical gold position here, and my actual holding of gold. Looking really, really good here at the moment. Need a rest or pullback there to add to a trade. Take a look at silver. Oh my goodness, silver had a big move again yesterday, just zooming here, breaking through some resistance. So now the question, breaking through that resistance, can it hold? Can it pull back and rest? Hold in that area. I would start taking a look at some of these minor stocks. GDX breaking the downtrend in a big way, in a zooming way here in the market. My oh my, really pushing up here. So coming back to a little support, getting some rest in there. I'd be watching for that next entry. You could look at the junior minor, GDXJ. Really taking off here, ripping to the upside, and you can even start looking at some of the individual stocks out there like Barrick Gold. Big break of the downtrend. Now any rest or pullback that would hold some support in here, and you guys know I've been talking about these for a little bit, to watch that higher low in here. Rest or pullback in here could set up an interesting bullish pattern in gold. And you know that pattern that I talk about a lot, that round and bottom breakout pattern, will not form here in this chart, but we've got that big stretch coming up into that 50. So again, this isn't just all the way to the moon here. We're going to have to work through some details in this, and whether or not we're actually going to cut rates, and look for that resting pullback before you jump on a trade like that. Don't chase something like this to the upside. Let's take a look at some other areas of the market that are pretty darn interesting. Walmart continues to set up after their earnings report. Notice we're up here, we're through all-time highs in Walmart, and we're holding in this beautiful, this is a weekly chart, but we're holding in that beautiful upside trend here in that chart. And if we go back to that daily, you can see this is a nice little consolidating move here in Walmart, and resting out toward this trend. So I would watch this carefully at any point in time between now and over here by this trend. I would look for Walmart to maybe move on higher. We've got Target moving up today on kind of lackluster results. Walmart had good results, so watch that carefully. It could move right on through to the top side with some of these big retailers that are going to be reporting here in the next few days. So Walmart looking pretty good. If we take a look at some of that oil sector, well, we're pulling back here this morning just a little bit in oil, and yesterday we had kind of that rough day and that pullback after breaking through that upper level. So I think there is a little bit of question here. While we're showing this massive confidence that the Fed's going to cut rates, we're not seeing that massive confidence in the oil sector for the rate cut. We've got gold shooting up in anticipation of the Fed cutting rates and the dollar falling, and at the same time we're looking at oil saying, well, it's not enough pullback in the dollar to overcome the demand destruction that's happening in the country. So interesting setups here in the market. There's so much emotion in this market, which just makes me feel that we've got big moves that are potentially coming. So just be prepared. It could be up, it could be down, but there's a lot of anticipation here going into this. So if we take a look at XLE at least is still holding this support level here in the chart and holding the upside trend, although it pulled back yesterday. Look for that next opportunity for that to move to the upside. One of the things that was pretty notable yesterday was the financials. The financials continuing to push in here to the upside. Now this is the XLF ETF. You can see a nice little consolidating move over here to trend. If we're going to cut rates, the market is suggesting that is going to be bullish for these banks and trying to push up. I just don't see any evidence that we're going to cut those rates, but watch that carefully in the financials as they push higher. And even KRE, where we're having these major concerns on NYCB and other banks, we're seeing some major concerns in that regional area. We're not seeing KRE really sell off like I would expect it would. Again, I think hopes of rate cuts. Just imagine if we don't get those rate cuts, how the market might react and how you're going to plan around that. So with that, everyone, running this kind of long in time, I want to wish you guys a fantastic day. Have a great Tuesday. Hey, for anyone that's around, if you can come over to the Hit Run Candlesticks website tonight, 7 p.m. Central Time, 8 p.m. Eastern Time. I'm going to be doing a public e-learning session. It's free to the public. I'm going to be talking about the covered call strategy and the fig leaf strategy. So if anyone is interested, love to see you there tonight, 8 p.m. Eastern. Just come to hitrandcandlesticks.com. We'll be in the free room. The link is right there at the top of the page. No sign in, no password or anything like that required. So hope to see you there. Going to wish you all the very, very best, and I'll see you right back here bright and early Wednesday morning. Have a great day, everyone.